Hello, everyone. Today I'm very excited to be sharing my Palantir Vision Research Report. This is as of March 31st, 2023 at 4 p.m. Eastern. And what we have here is my stance on Palantir currently. 3 thesis points and valuation as well. We're going to be going through the base case valuation from where Palantir is currently at $8.45 per share. I will say a lot of credit is due to the Palantir community for a lot of inspiration on this project, as well as some of the content included. So big shout out to Arnie, Either Square, many others. Without further ado, let's dive in. I've been working on sort of for the past month, and I'm excited to do a read through of it today, as well as discuss some key elements. And I will be publishing this. You'll be able to download it next week, along with an update to the Palantir valuation model. And all of those links I will leave once the document is ready. Follow me on Twitter if you want to know exactly when you'll have access. But I wanted to kick things off by sort of reading through my research and discussing certain key points. So we'll start with my outlook on Palantir. I see it currently as an attractive blend of growth and value as the P&L inflects to GAAP profitability. The research in this report supports a 30% upside of fair value and a price target of $11 per share. So I'm not going to bore you with the details you already know about Palantir, but I'm going to get into my differentiated view for where the company currently stands. With a flip to GAAP profitability in 2023, Palantir offers a compelling opportunity. Recession-resilient cash flows as a government contractor, scalable enterprise SaaS economics improving with strong network effects, and management focused on cost control economics driving margin expansion. In the investment overview, I say Palantir offers, once again, an attractive combination of growth and value, benefiting from AI development in both commercial and government sectors, and its guidance for full-year GAAP profitability serves as a milestone that will lead to a re-rating of its valuation and shortening its duration as an investment as it gains share in both of its end markets. Trading near its historically lowest valuation, Palantir's potential is underappreciated by the market. As the artificial intelligence race intensifies, Palantir's practical, human-centric approach, empowering users by augmenting decision-making abilities, has been overlooked. Palantir is primed to capitalize on newfound interest in its proven and effective human-AI hybrid solutions. As the company continues to expand its client base, agnostic to many industries and sectors, its unique value proposition will be realized and will drive long-term growth and shareholder returns. You can see over the last year, customer count's up 55%, and that's the segmentation we have currently. Here is my illustration of the three-phased acquisition flywheel. We get into some of this about Palantir selling software licenses and as well as professional support services. That's where they get called a consultancy, but you have to know the software license portion accounts for the majority of the revenue. As Palantir's product scales within an organization, the business is able to earn more from its existing customers, and it earned a 115% net dollar retention rate last year. Of course, with the acquire phase, you have short-term pilots as a loss leader, and then the expand phase is moving horizontally and vertically within the organization, and then scale where the customer is ultimately self-sufficient, and the contribution margin inflects to the positive. And this is an important aspect, of course, of onboarding new clients and potentially suppressing margins until those clients are able to revenue and profits on their own. So here we have the Forrester Wave ranking of Palantir as a leader in AI ML, as well as more on the DoD Impact Level 6 clearance. Here we get into the first detailed thesis segment. Palantir's Gotham product boasts the resiliency of a government contractor with defense spending tailwinds and product stickiness. And key partners listed here, as well as this is where I spent a lot of time considering how exactly do you evaluate Palantir's government business in terms of market size and so on. Well, I used data from Statista, which is a market research platform, and they have some information on the enterprise applications market worldwide. And so I just used aerospace and defense and government share of that larger amount to get a segment that I feel is representative for Palantir's Gotham business. So you'll see here, of that amount from 2017 to 2022, it's been compounding at a market share rate gaining 10% year on year and is expected to continue at 8% going forward. This is the enterprise applications market worldwide, and I think this is relevant because, of course, you could look at data analytics, big data, or anything like that, or something relating to artificial intelligence, or maybe just SaaS. But I think enterprise applications is where you would essentially narrow it down to for Palantir, and then you can get a percentage market share by dividing Palantir's Gotham revenue into the market that we have just identified. Again, it's not an entirely big deal what you ultimately declare the market to be. It's more important to see, is Palantir gaining share? And yes, that is the case. Palantir's market share has gone from about 1% to 3%, and I expect it to continue to grow. It's been compounding at a rate of 20% in the past, and I think it will continue to do decently in the single digits going forward as the market expands. So I'll read through some of what I say here about Gotham. Palantir's flagship government software platform effectively integrates, analyzes, and visualizes vast amounts of disparate data, empowering governments to make informed decisions, enhance situational awareness, and improve operational efficiency in critical areas such as intelligence, defense, and law enforcement. Palantir's government business has consistently demonstrated impressive growth and a competitive edge within the industry. With a 5-year revenue CAGR of 33%, Palantir Government substantially outperformed peers. This growth not only highlights Palantir's strong value proposition to its government clients, but also positions it as a dominant growing market player, far exceeding the market average growth rate of 10%, as we just looked at, with government and defense budgets for software projected to rise from $39 billion to $53 billion by 2025. Palantir's government business is set to continue to gain share. I talk about how it's deeply embedded within the U.S. government, NATO spending tailwinds, and Palantir's proven expertise in delivering effective mission-critical solutions positions it as the go-to partner for governments during times of crisis, as is made evident by current involvements in the satellite with Meta Constellation and successful refugee management. So ultimately, Palantir's growing position in government, coupled with the robust tailwinds from global intelligence and defense spending, establishes Palantir's Gotham product as a recession-resilient business. Palantir's ability to innovate and meet government needs as an engineering-first organization, plus the increasing demand for such data-driven solutions, will ensure market dominance and solidify its role as a trusted partner for governments of the West. So that was what I had to say about Gotham, and you'll notice Thesis 2 is revolving Palantir's Foundry. I bet you can guess what Thesis 3 is directed towards. So here we have some more clients, and then same type of deal for establishing a market for Palantir's Foundry. This time it's the entire enterprise applications market from Statista, but only excluding the aerospace and defense and government segments. They're similar profile to how the enterprise application software market is growing, but we can take a closer look at the market share growth, compounding at a rate of 15%. I think, once again, it's going to do well in the single digits. Certainly could be more than that, but that's just what this graphic represents. Palantir's Foundry Cloud product has the scalability of enterprise SaaS with network effects that make it the growth engine of the business. Palantir's Foundry product benefits from robust scale advantages as an enterprise software as a service with network effects and growing cash flows. In 2022, Palantir began to implement a usage-based pricing model for Foundry for the first time, a move designed to accelerate the platform's growth and broaden its appeal. I believe this new pricing structure, coupled with improved sales strategies as the sales force continues to take hold, makes the platform more accessible and attractive to a wider range of customers, including smaller organizations. The addition of modularity allows for greater customization and flexibility, enabling clients to choose and pay for only the features they need. I say as the Palantir network expands, it reaps virtuous benefits such as more increased interest from developers to build on the platform, which enables corporate IT departments to further implement the product, and more archetypes generated to support all clients. Despite the current economic outlook delaying some spending on digital transformation projects like Palantir, the secular tailwind of growing data demands remain. As economic confidence improves, Palantir will experience a reacceleration in demand for Foundry. Even in a difficult operating environment, Palantir continues to obviously build on its existing programs, announce new partnerships, continue to invest in its business, building the sales team, shipping new features, adding functionality, and so on. And then I say paying attention to leads on new potential partnerships can offer a look into the growth of the business. New customers counted as having a registered domain at palantirgov.com and palantirfoundry.com or another official domain have seen a significant growth in recent quarters, indicating strong interest in the product as customers join the acquisition phase and begin the journey to becoming full-time customers. In early data for this Q1, new links are up, censored from 22 to blank year over year after a couple seasonally strong quarters with a client count that should fuel fiscal year 2023 revenue growth. So once again, thanks to Either Square for doing this research, but you're going to have to get those numbers from him. Trust me, they're great numbers. And third, you guessed it, Palantir's focus on dropping the marginal cost of deployment on the quest for profitability is focused around Palantir's Apollo platform and the importance and the competitive advantage that it offers. Palantir is committed to reducing the marginal cost of deployment of its software to drive profitability. Apollo, Palantir's third major software product, is a vertically integrated software platform that streamlines the deployment and management of its software platforms, Foundry and Gotham. This allows for more efficient resource allocation, lower operational costs, and ultimately a faster path to profitability. One of the key advantages of Apollo is its ability to simplify the deployment process, reducing the need for human intervention and making it more cost-effective. By automating the delivery and updating of its software, Apollo ensures that Palantir's platforms are up-to-date, secure, and operating at peak efficiency. This automation significantly reduces the time and costs associated with manual deployment and so on. This serves as a major advantage for Palantir's pace of innovation and moat. I close by saying Palantir's scalability reduces deployment costs as Palantir's clientele expands, necessitating efficient software deployment across various industries. Its cloud-agnostic infrastructure allows seamless integration with multiple cloud providers, enhancing competitive advantage, lowering costs, and improving operational efficiency. So here you can see year-over-year gross profit growth versus year-over-year operating expense growth. And so great to see that gross profit is compounding at a faster rate than the operating expenses. And here's a graphic from App Economy Insights about Palantir's Q4, which was still an operating loss, but the economics are trending towards full year 2023 profits. Now on to primary research. I cite my conversation with Palantir's CTO Shyam Sankar in August of 2021, talking about Palantir's foray into the middle market, building for scale, their privacy-first approach often being misunderstood, and their commitment to serving core products for growth. Here we discuss Palantir's TAM and how they value it and what they mentioned it to be in the S1 at $119 billion. With revenue currently at just $2 billion. How they break that down and ultimately Palantir, how its software ranks up AI software sales against some comparable companies. And now for catalysts to fair value. So I mentioned the upside, the price target, what I believe to be decently fair value for where the company is currently. We're going to get into those valuations in just a moment. But a catalyst being commercial rebound. So as economic confidence rebounds from its current trough and business leaders accelerate spending on necessary digital transformations, Palantir is well positioned to capitalize on this upswing. In a market where weaker cloud companies may struggle to adapt, Palantir is poised to reinforce its status as a premier cloud player by providing innovative solutions to companies' most critical challenges, as well as an increased volume of deals with adding the consumption-based pricing approach. So I know it hasn't made a big difference just yet, but Palantir has first and foremost offered its products as full stack products, and its peers benefit from individualized offerings. So Palantir enabling the pay-for-use pricing will simplify for IT departments the ability to integrate Palantir's product when considering it as a one-time integration. And I believe many small to medium-sized businesses are more comfortable with such agreements, and this will spur demand for Palantir's robust software. And of course, the NHS deal, we have this major pending contract for $590 million later this year. And so the NHS, as you know, is seeking to integrate Palantir more than it has already. This could pave the way for further opportunities in the global healthcare sector, running the platform. And just going into that, this deal landing is not included in my base case. It is in my bull case, so you'll have to check out the full valuation model for that. Again, link in the description if you would like to support by purchasing that. Downside risks, I mentioned AGI, of course, not a near-term risk, but you do have to consider the way Palantir is set up is that if someone else develops a better intelligence system that's able to provide business intelligence than Palantir, there's the risk, right? And then I mentioned customer concentration. I know this is a big one that other people harp on a lot about fluctuations by losing top clients, but I counter this by showing the graphic here about Palantir's average 12-month revenue per their top 20 customers only increasing. So I don't see it as a big risk at this point, but it's worth citing nonetheless. And the financial volatility, because of their sizable irregular contracts, it does present a risk to the quarter-over-quarter growth stability, as we've seen, and it could be a surprise to the upside or downside if certain deals get shuffled around. So now on to the valuation. For the relative valuation, CompCo, I've used a 20% weight. So I talk about how Palantir is difficult to comp because there's not really anyone that does what they do, especially no competitors that really do government and commercial like Palantir does. Business model's different. The approach is different. The high-profile projects are different. But that being said, I have taken a relative value approach, comparable companies, compared Palantir with Intel and Defense as well as commercial SaaS. So for the government business, I use Tyler Technologies as a comparable, and for the commercial business, I've used Datadog, MongoDB, Workday, and Splunk. And I used a 65th percentile completing the benchmark with Palantir's superior revenue growth and gross margin against the comp set, resulting in an implied value of, it's actually higher than this now. It's like $10.47 per share. So Palantir currently trades at a corresponding discount to that value, and the spread to that target, I believe, is going to close for the reasons discussed in this report, as well as those catalysts. But none of this is financial advice. Whether it's tweaking my valuation model or building your own, I very much encourage your own work. So how does this work, right? Tyler Technologies, how are they relevant to Palantir? Same with the rest of them. I know there are a bunch of other names that, at least on the commercial SaaS side, could be good comps for Palantir, but you have to consider that when you're doing a comparable, you need the company's financials to be comparable as well. Not just if they're competing against Palantir or if they're in the same sector. So you see what I did here is I evaluated the 3-year revenue CAGR, the 3-year gross margin average, and next 12 months free cash flow yield to get a proxy for how should we benchmark Palantir against this comp set. So I took the 50th percentile. Palantir is a bit low on the next 12-month free cash flow yield, but they're about 65th with the revenue CAGR, and they're above on the gross margin. So ultimately, I just ranked them at 65th. And so they currently trade for 6 times EV to Rev, but that 65th percentile against the comp set puts that at 8 times EV to Rev. So we multiply 8 by their fiscal year 2 Wall Street compiled consensus revenue estimate to get our enterprise value, and then we subtract the net debt. Of course, they don't have any debt, which, we subtract their cash. We add their cash, and we get free value divided by the shares, and that's how we get a relative value for Palantir above $10 per share. Ultimately, I think it's definitely interesting. Palantir is certainly a tough company to comp, but the comps do point to Palantir being undervalued, not by a very significant amount, but by a decent amount, and I think it's worth noting. Now on to the DCF. This is for the base case, and so here you will see my forecast for Palantir and ultimately the approach that gets me to a 32% upside, as you'll see down here. So I have revenue growing from 24% down to under 20% through the end of the decade, and you'll see I have gross profit margin actually increasing a bit throughout. We get some margin expansion associated with what I believe a mix shift to commercial. The other thing I should show you is that if you go to the segment data down here that I've pulled together, right now Palantir's commercial is about 44% of the business. I think it's going to ultimately become more than 60%. And when it does become more than 60%, a lot of the government business, from my understanding, has more professional services involved. And due to that flywheel we discussed earlier, when Palantir's commercial customers are able to become independent, that's where the margins really soar. So I think Palantir will experience some margin expansion as it has historically, as the government business becomes a larger amount of overall revenue. And you will see the EBIT margin, operating profit. I think Palantir is going to become very profitable in line with many other software companies. Then we just basically get down to the free cash flow, discount that back to present value for each of the periods. This is a 10-year forecast, and I discount it back at the weighted average cost of capital, which I have used for a discount rate. And this is based on Palantir has some operating lease agreements that I have learned can be a proxy for debt. So while Palantir doesn't necessarily have any debt, it's worth considering that amount to be debt. So it's about $250 million. So I just threw that in there, and you're looking at it right here, but I get a whack of 11.4%, and so that's our discount rate. I've seen some other places have it higher, but they have a much higher beta for Palantir. I don't think a beta north of 1.4 is even very realistic, considering it used to be so high. It's coming down. It's definitely good to have a lower beta. And I think Palantir, if you look at the peers as well, Palantir's peers really have betas much less than that. So I think going forward, the volatility will subside a bit. I think we've seen some of that already. That's just my rationale there. And so you discount all of those using a perpetual growth rate of 3% for the base case, and you get over $11 per share of current value. So based on this forecast, Palantir stock should be trading north of $11. Again, this is the base case. If you want the bull case and bear case, you're going to have to download my private valuation model, but totally making this open and free on the base case to everyone. So I wanted to do that. And here in the appendix, I just have some more information on the product. So Gotham, for instance, Foundry, of course, just more if you want to read on those different things. And the governance, here we have Palantir's governance information, 10-year of 10 years. Insider ownership, 7.3%. Here's the compensation, and as well as the guidance accuracy pulled from FactSet. We have an average beat of 2%, literally every time. They haven't missed on sales, which is great to see. Here's the ownership, the valuation. This is definitely interesting to look at. 6.6% or 6.6 times price to sales for 2024 is what Palantir is currently trading at, as well as a PEG for fiscal year 2 of 0.7. However, this is using FactSet's long-term growth rate for Palantir, which is 50%, and that's just skewed by incomplete information. So it's actually higher than this, but It's definitely had a historical low nonetheless. And here's the short interest. It is a little bit outdated. I tweeted this out before. It's a little outdated. It's back down a bit, but definitely some short interest in Palantir. I think that could catalyze a move to the upside. And here we have the targets and the ratings. Palantir is definitely an unpopular stock at this point, which is sort of what you want to see for opportunity, right? We only have a few buy targets. And I think this is a result of Palantir doing the direct listing, not paying tons of fees to banks to actually do the traditional initial public offering fanfare. So I think that's definitely coming into play, but really a lot of analysts are uncertain, and that's where opportunity lies, right? You do your own research, you take a stand, you play out the numbers, and you'll ultimately see what plays out. And so Palantir has $2.6 billion in cash. You can see the credit facilities here. Some product reviews I pulled together. That is from the FoundryCon, and that's ultimately where we are currently. So thank you for watching. Thank you for your support as I pulled this together. Hopefully you enjoy this Palantir Vision research report, and definitely go check it out. Download it for yourself. And I definitely appreciate your support on the Palantir valuation model. Again, that full valuation model with all of the 3 different cases is going to be available very shortly.